Hello everyone, this is Amit here and I will take you through yesterday's Bank Nifty futures price action analysis using 1 minute time frame. We'll go through bar by bar analysis of the important sections of the first hour of the opening range, right? This dark blue line is yesterday's low, which is basically Thursday's low of the day, right? Price was falling down and you can see the bar 1 opening below this low of yesterday, so breakout below yesterday. It went down quite a distance in terms of the range that it covered, right? But it couldn't hold there, right? Price failed to go and close below the yesterday's low. Instead it came back all the way up and bar closed as bullish. So it was a failed breakout, right, at yesterday's low, which is a good opportunity for you to get long and capitalize on that clue that the breakout below yesterday's low is fading, which possibly means that at least there will be some continuation of move up. But it was going to be into this immediate resistance, which was the EMA. Okay, so it depends on you whether you want to go for such trades or not. I did not, because of two reasons. One, it was into immediate resistance and the room was not much. So if you look at this, it was high was 373.80, so around 374, and this high is 388, so not even 20 points. So I did not want to go for this trade. Look what happened next. Bar 2, the bulls, those bought in here waiting on this failed breakout. You could see that after this close there was a gap down, so it was not a immediate upthrust, right? There was a push from bears that was evident from this gap down opening. Bulls did manage to push the prices up. So from this opening, which is open is 359 to high is 388, so they did manage to get around 25 to 30 points depending upon the where they bought it, of course. But it failed in to the EMA, so bears scaling in this zone. So it's a breakout below yesterday's low, and this is a pullback after that breakout. So it's a breakout pullback short. Immediately you can see that bears selling the close of this bar. There's not much movement on the upside, which clearly tells you that bears were really strong, and that's what happened here, wherein you got this very strong entry bar covering or giving you at least 20 points on, or at least more than 30 points actually on the entry bar itself. It closed near its low and there was a follow through, right? So one short trade, which was a breakout pullback entry. On this is a 1 minute chart, we go with 7 points of the risk and at least 20 points of profit target. So that way it is minimum 1:2 risk reward ratio, right? Then what happened next? Bar 5, this is an inside bar, decent close, bullish close. Then you see a follow through for this bar 5, right? What do you see? Now, where are we in the overall context, right? It's a downtrend that has been going on. There was an attempt made by bulls to fail the breakout below yesterday's low, but that did not last long. So what we are looking at is a continuation of downtrend unless proven otherwise, right? What do you see next? Bears sold the close of this bar 6. There you see a gap down, so bears are applying the pressure because those bears who kept selling here, they sold the close of this bar, possibly this bar as well. They're scaling in this zone about this bar's high, right? So they scale in here. Looking at this, these bulls who were trying to scalp were disappointed, okay, or those who still kept waiting were disappointed. So what they did is they bought the close of this bar 7, and this basically scaled in here and they gave up at their break-even price. That's an area where we get in. This is the give up or disappointment trade as far as bulls are concerned. That's what I really bet on heavily in the opening range, right? So you get short below this bar 7, which is 15301.5, right? And you get your 20 or 30 points during bar 10, right? So that's another second short trade that you got, right? Now you could continue holding this initial short trade that you initiated here and keep trading the stops. After every lower low, you move the stop to the latest uh, swing high or pivot high, right? And keep holding, and then keep placing these in between trades to capitalize. So it's up to you how you manage the trades, but I'm just explaining individual trades that took place that you could capitalize on using just the simple price action analysis mechanism, right? What happened here next is after this breakout below this bar 4, immediately bulls came into picture. Maybe those bulls who bought in this zone were scaling in lower here and they are ready to push the prices up, right? Now looking at this, right, the bears try to scale in, they try to apply the pressure one more time, but it was not enough. You see this tail, that means bulls were overpowering them, so bears gave up here in this zone. Some got out at break even or maybe small profit, right? And that's exactly, you see this bar closed here, bar 13, there's a gap up opening, and bulls start pushing the prices up. Now this is a counter trend entry, long entry. If you can act quickly and decisively, you go for such trades. Otherwise, just keep away from such trades. So, right, this trade, if you took this trade about this bar's high 303, it ran into 328, so at least 20 points of profit was available for you to take, right? It ran into this resistance into EMA, and it's making a double top with this bar as well. And what you see here is these bulls who are trying to push the prices up were not able to hold the ground. This is a good opportunity wherein bears applied the pressure on bar 19, right? And those bulls who were trying to see if this could continue, this uptrend could continue, they gave up here. That's why you see this tail on top of bar 20. So the moment you see this, you place short below 19, bar 19. This is a give up by bulls. That's what you are capitalizing on. Now this particular trade was definitely more than 20 or 30 points. It was even 50 points. So depending upon how you manage your trades, you could book the profits. This was the third short trade of the day, right? Now I have drawn this trend line, and we'll see how it behaves or acts as a resistance for this particular trade, right? Here what happened is, this is basically the third push. If you look at this down move, first, second, and third push, and some bullish buying pressure came in, and bulls tried to push the prices up, but it couldn't manage to go past EMA. Again, it failed. Bears, you see this three consecutive bear bars coming in, so they are applying the pressure, right? So you see this particular section being described in this chart, bars 31 to 33, three consecutive bear bars, bars 34 to 38. This is a bull attempt, two-legged bull attempt after three consecutive bear bars, but it was a weak one into EMA. So we want to wait for bulls to give up, right? It will be worth trend entry. Downtrend is on here. We want to look at short opportunities as much as we can, or we are just keeping the part position open from this initial short trade that was initiated, right? Bar 39 is basically this bar wherein bears applied the pressure, and this breakout built above the EMA, which is through bar 38 failed, right? So bulls are going to be disappointed. They scaled in on bar 40 and gave up. This tail that you see is a sign that they gave up. It is not a strong close, it is a close below EMA, right? So you place short below 40 and you enter on that bar, right? So that low is 15 to 55. It went to 232, so you got your 20 points immediately on this entry bar itself. This is the beauty of this disappointment or give up trades, wherein they move really quickly because somebody wants to get out of this trade, or one side wants to get out of the trade as quickly as possible. That gives the fuel to this move, right? Now about the stops management, what happened here is that this is basically a triangle. One, two pushes down, one and two pushes up, and now it's a breakout out of this triangle. right? You don't move your stops to break in too quickly, because usually there is a breakout test in a bar or max 2. So that's exactly what happened on bar 42, right? It tested this low is 255 and this high is 253.90. It did not hit the break-even stop, at least theoretically, but depending upon where you got your fill on the short trade, it might have. And hence it is very important that you at least wait for one bar, right, for the stop to be more to break even. If you are going to continue with a swing trade, if you booked your profit at 20 points, fine, nothing to be worried about. Move on to the next trade. The moment your trade is done, move on to the next trade. Look at what is the next opportunity that is setting up, even if it was a winner or a loser. Especially if it was a loser, do not think about it during your live session or live trading, because that doesn't matter. What matters is what you can do now. Think about what the chart is telling you now, because most of the times, the in the moments when you're thinking about your failed trades, that is when the good trades set up, the right trades set up, and you lose those opportunities, and then you keep repenting, or become frustrated that you missed such trades, right? So during the live market or open market hours, focus on what you can do and execute the plan as close to accuracy as possible, right? That being said, this bar basically tested the breakout below this bar, and it failed. It was just a breakout test, right? And then you go short below this bar, because these bulls who were still holding the ground, they gave up, or it was just a trap to get some of the weak short traders out of this trade, and that basically gives fuel to this rally, right? So these are trapped out traders, and some of them are trapped in traders, right? So that's why you see this such a big bar. Always observe wherever there are big bars on the chart, look at what happened on the left side. What is driving such a behavior, right? These are the exact type of moves or uh, price action that we want to get into, that gives you quick profit, so that you don't need to sit through up and down. That might be increasing your frustration, or you might be getting emotional or anxious, or whatever that is, right? So find out such setups and make sure you execute on them flawlessly. So this was another short trade that was again a 20 or at least 30 points, because this is 234.80. This went down at least 50 points in the entry bar itself. Now this is going into the support zone, possibly turning out to be a trading range day, because bar one's range was so big. uh, uh, Price failed above its high, and possibility of it failing below low is what needs to be checked, and accordingly the price action will turn out, whether it is a trading range day, or it is going to continue to be in a downtrend, or it reverses and becomes an uptrend day. That cannot be predicted. We just see what is happening now and act accordingly, decisively. Okay, that's it. I hope this analysis helped. This is my blog. If you want to read about these kind of patterns and more details, you can go to this and read more material on this type of analysis. Thank you for watching. All the best.